Do you believe that that is a real, like a real true thing that happens for traders that they inherit the mindset of the market that they first start trading in?
Yeah, I think this is probably underappreciated too. I think it's definitely true. I think you can see it across even generations. Like I think of even my parents' generation and how they think about risk and how comfortable they are with risk, and that being a function of their parents growing up and the time that those people like how they viewed risk and what was going on in the world and in markets at those times. I think it's unequivocally true, and it's kind of like one of the things that, especially in crypto, like there's been so many cycles, and there's a little bit of a difference between each group of people and when you joined, and you're kind of you have that initial experience, and I think one of the things that is really difficult um, is to constantly or like continue to seek out people who joined either before or after you, and mostly that's because I think like you kind of have to always be fighting against your own bias, and less like bias and more just like understanding why you may like the lens you look at everything through is probably different than other people, and is that's just a function of that's one of the reasons why I think like it's part of why I try to talk to new traders who joined in years that I didn't, because they look at things slightly different, or they have like a view or a lens um, that they trade on, or how they think about markets. And I think it definitely affects you, and I think like it's very hard to like internalize it.
Yeah. So then the importance of developing your trading community, it sounds like this is a really key big piece.
Yeah, yeah, for sure. I think it's one like this is something I think Jez has said in the past, which is like you kind of need when you initially start, especially in crypto, it's helpful to do it with other people and find people that have skill sets complementary to you, and who you can talk to and who you guys can kind of like um, start to grow and start to mature or start to like level up quicker, versus like playing it as a solo player game. And then I think like that is probably step one, and then step two to me is actually not like fossilizing or ossifying, like not getting too stuck in your ways or with that group, because it's easy to, I think, like um, yeah, just like plateau,
Mm.
or to think like you know better than the next group of people just because you've been there longer, and it's actually not like that's actually not the case in my opinion. So I think you do have to constantly be trying to find the version of you that joined later or earlier than you.
Interesting. And I mean, I kind of have a decent sense for how you do that, but how would you recommend doing that? Specifically, how do you find the people that are ahead of you? Like, what's the best
Yeah,
methodology for that, you think?
yeah. I think so. My personal view is always that actually you should be sharing, like you should be people should be publicizing their ideas or like sharing their thoughts on the internet as much as they can. And maybe that's in Discord channels where you find traders, maybe it's on Twitter, maybe it's in Telegram chats. But I do think there's something to the fact that if you start sharing things, um, eh, eh, there's like you're going to almost by brute force, like you're going to find people who are at least interested in the stuff that you're looking at. Like if you're interested in something, oh, you have an opinion on it. Somebody else may see it and reach out to you, or you see somebody else talking about it. And I just think like not too many people probably get stuck where they're kind of like in this solo game of trying to do it all on their own, and they're a little bit afraid of like, well, if I say something and people think I'm dumb, then people won't want to talk to me, or I won't be able to reach out to people I want to speak to. I just think that's like not true. I think that the most people, especially who have been around, actually are constantly trying to find the people who are um, kind of like doing the stuff that they were doing in the past. And so to me, it's like people should be sharing as much as they can. Um, and eventually, I think you kind of find it. Like that's always been my like all the people I talk to regularly, I've found literally on the internet. Like none of them are IRL friends that spend time in crypto who I knew before. It's all through Discord or through Twitter or through Telegram. Um, yeah, it's kind of like that. You do it for long enough, people will find you.
Right.
That's kind of my opinion.
Yeah. Okay. Who is your favorite trader, or who are your favorite traders?
That's a good question. I mean, all right. So like, I would say I'm a Druck guy. I love Druck. I know he's like a kind of a boomer and mid curve answer, but he's to me like he's the goat just because of the longevity.
Mm-hmm.
And so I have a lot of respect for the people who one have done it for a really long time, and two specifically like even as he gets older, um, he's still very intellectually flexible. Like that's the thing that I think is one, he's intellectually flexible, and two, he's a super concentrated. And so like there's a bunch of different strategies, right? You can look at somebody like building out I don't know, very maybe like thematic baskets and they have like, you know, 0.5% allocation to a zillion names and that's how they want to express their view. Then you have kind of like the druck of, you know, maybe heavily concentrated, um, and I'm gonna kind of like watch my basket really tightly. And he's shown in the past like the ability to kind of immediately flip like his opinion, which
Mm-hmm.
I think like is the thing that I is the most difficult thing to me. And I don't know, I have like a ton of respect for people who do that. I think like if I think of what I view as like quote unquote traders today, um, a lot of times we get obsessed with like the charts because it's like, oh, the chart looks good or the chart looks bullish or bearish or these things. And I think like those are good tools, but they're not necessarily like they're I actually think they're good risk mitigation tools, but they're not necessarily the thing that I don't know that I think the best traders uh, like I think
Like
people use them
rely
as
on.
risk mitigants, not like, oh, I'm going to develop some conviction in this thing for a bunch of different reasons. So yeah, I mean Druck's a goat, but I don't know. There's so many different ways to do it. Like I have a lot of respect for the um, for actually a lot of people. Like it's hard to say on like crypto Twitter and that stuff because like you don't know how people are doing. You just talk to them and think like, okay, cool. These are things I haven't thought about that I appreciate, even if I don't agree with them. And I think like even for me over the last couple months, there's a bunch of people I've talked to um, who I actually have disagreed with, and I see the like angle that they take, and I'm like, look, this is a very valid reason, and it makes me be like, okay, actually, like this person's very sharp. I don't have to agree with what they're doing, but actually, yeah, I have a lot of respect for a bunch of people like that.
Hit me with like some of the top two, three crypto Twitter people that you think
Yeah,
are like must follows.
I think it's yeah. I think the people I've probably disagreed with recently, who I think I've probably been right and I've been wrong about, is like Chumba is a good example. Um, Molsey is somebody else who I think is directionally kind of trades the same way in the sense of like he's not like day trading. He has views of like there's a couple things that I'm gonna want to own, and I want to find like the good spots or the best times and the best like risk returns to start to own them. I think he's been somebody who publicly writes, and I kind of like his process as well. Um, Even though, yeah, and like I think he was more bearish. Both of those guys were more bearish than I was, and they were definitely on the right side of that. And so even in the moment, I was like, I actually don't. I disagree with this, but I see the argument because I think if you think of stuff as like probability shaped all the time, you can be like, cool. I don't think this is the what's going to happen, but this is definitely within the realm of like outcomes that I can see, and when they're right, it's kind of like cool, good game, like great trade. And so like those are two guys uh, I've probably disagreed with recently, and then probably agree with on longer time horizon. Uh, but yeah, those are like two off the top of my head.
Okay, awesome. Um, how do you deal with the discomfort of putting on risk?
Um,
Do you
I
feel discomfort when you like take a size trade?
yeah, I think I do. I think like this is part of this is like the emotion. Uh, one of the things is like everybody talks about like, oh, you should be as unemotional as possible when you're trading, and I think that's largely true. But I actually think like what people really mean is you should like feel the emotion that you have. You shouldn't necessarily like, yeah, it would be great to be robotic, and I think a lot of people, technical traders probably treat it that way. Um, but I think like acknowledging the feelings you have is probably the most beneficial. And so when I think of that, like you're never good entries. Put it this way, like very very rarely are like great entries gonna feel awesome in the moment. Um, and so I think like you have to understand how you feel during those moments, and I think journaling is a huge thing. Like if you this is something I've done for a while. I've probably done less over the last like 2 years, but I, I've always found that even if you're just writing down a couple notes, when you look back, you can kind of get a sense of how you were feeling in the moment, and I think that helps you improve over time. Um, so yeah, I think for me, I've been I've done it for long enough that I can kind of feel my own biases, at least to some degree. Like it's never perfect, and you're still gonna make mistakes, but I that's at least how I think about it. And I think the other thing is like you have to understand how comfortable your actual risk appetite is. Like this is another thing that you probably learn over time, which is am I comfortable today having 100% of my uh, whatever trading account, let's call it, in one trade? And the answer might be no. Like maybe I was comfortable with that 5 years ago or 6 years ago, or whatever the case is, and maybe people are comfortable with that today. But like for me, that's not the case. And so like you kind of you have to have a sense of like, cool, if this thing draws down, like when you enter a trade, where's my stop loss? Like what would invalidate the thing? Um, and like understanding how comfortable you personally are with a position. I think I think that's like it's a little meta, but I do think like the self awareness is probably underappreciated.
Totally, totally. I think, and would you say that the only way to really develop that self awareness is time in the game?
I think that's probably, yeah. I mean, that's the most valuable. Like if if you can, um, yeah. Like to me, the this is kind of like why I think journaling is important. Is you can, I think, get to that answer or get to that state of like understanding those emotions quicker. And so to me, the most important thing is maybe not time in the game, and maybe it's more how do you advance your the ability to understand how you're feeling within like those environments as quick as possible.
Hmm.
And so like for me, it's like if I didn't journal, I may not be able to go back and look at, read old notes of how I was feeling when I made certain decisions. And so I wouldn't have learned as quickly. Like maybe it would have taken me another XYZ years, or maybe I never would have gotten to a point where I understood it. So to me, it's like, cool, what are the things that help you get to that point quicker? Um, and, it may be like for some people, having smaller size positions and like actually jotting down how they're feeling or what they're thinking, and then kind of like reviewing those things more frequently. Maybe that does it for them. I don't know what it is, but those are to me, it's always like, how quickly can you get to that state where you like feel comfortable that you understand how you're feeling?
Do you find that,
Obviously, years in the market helps.
right? Yeah, I mean, have you found that, what am I trying to say here? I might be blanking a little bit. Well, all right. Before I ask the question that I'm trying to put together in my head, let me ask you this about journaling. Do you journal before a trade? Do you journal while you're in the trade? Do you journal at the end of a trade to kind of recap it? How do you think about that?
Yeah. So when I used to do it, actually, what I would do is, um, I would kind of write. I had my own like a Discord for myself, and
Oh,
so I was the
cool.
only person in. It was private, and I would just jot down every day, like, hey, because I also generally like to look at like from high level to low level. So I'll look at like generally the market and be like, cool, do I think it's risk on or risk off broadly? And then like how do I figure out the thing that is the best way to express how I'm feeling? And so what I'm jotting down was like, all right, what am I looking at today? And it might be, oh, rates are doing something weird, or the dollar is doing something weird, or some sector, like tech is doing this, or industrials are doing that. And so I would write kind of like just a couple bullet points on, hey, this is what I'm looking at today, or this is what is interesting, or where I'm, I guess, what I'm reading. And then anytime you have a trade, it's like, cool, entry, um, where's my stop loss, where's my take profit, and then maybe like a bullet on like, okay, like why right now, why this one, and that to me, like, sure, it's not a lot of information. It takes a couple minutes, but the benefit comes from if you literally do that every day, then you can look back at months or a year, the next year, like, cool, like let me go back and look at some of the charts for the stuff that I traded. Let me look at, um, was the way I was writing, did it change? Like, can you feel any like emotional states that were happening within like your own notes, whether that's like depression, fear, euphoria, the types of stuff you were trading. Like I think over time that just compounds, and to me, like, trading should be pretty boring.
Mm,
Um, which I think it gets like glamorized because you have these like movies come out or people talk about you know these massive wins that people have. But I think part of it's like, to me, it's, if you're going to do it for a really long time, it's a little bit of a grind where it should be boring, and like not the sexiest thing.
mm-hmm.
um, and so yeah, I just think like that compounds over time. Like the more you're doing it, the more you can look back and I think get better. That's kind of at least my approach.
Yeah, no, I'm completely with you on that. Do you have specific sizing rules per trade?
So when I will say, like, I used to be much more active. Today I'm obviously doing like venture and have more restrictions and can't really do as much. But yeah, I think I had probably like, they were probably too lax, to be honest. But I had like sizing things on not wanting any single position to get above 50% of the book, or get above 60% of the book. But they were in hindsight, they should have been probably tighter, and um, I probably didn't follow them as well as I should have, which is like, to me, I think if I were gonna do it again, or like go back and like retrade the way I did for a decade, let's say, I would have had probably more stringent kind of like concentrations on any one position size,
Hmm.
or like take profits even, because I think for me personally, the take profit side is more difficult than like the entry side. Like I feel pretty comfortable building conviction in positions, and saying, okay, cool, like these are all the reasons I think this thing's gonna matter. I think the take profit side um, is for me personally the more difficult thing, which
I,
is not true for everybody.
I was going to push back and say I think that's mostly true for most people. I think it's harder
Yeah,
to understand where to take profit than it is to understand where you might be wrong. Because wrong can be a function of just, I'm willing to risk this much. And if I lose more than that, then as long as I'm sticking to whatever my process is, I have to cut when I lose X% or whatever it is. If something's going
Yeah,
up and to the right and you're in it, how do you know that it's time to take profit? Is it a target that you have in your head? Is it a function of the market environment at the time? How do you know? It's hard.
yeah, yeah. It is, and I think like increasingly too, like the market is. My view is markets are just going to keep getting more volatile over the next couple of years, and you're seeing this on the like traditional side that assets are starting to move a little bit more towards crypto in terms of they're more narrative based than they used to be. They are more retail driven than they used to be. The market structure has changed such that the retail bid matters more in traditional markets than it did 10 years ago or 15 years ago. And I think that means vol goes up. And so I think to your point, it makes the like rub is almost that if you look at all the best performing assets and you think of even things like Nvidia, people joke like, oh, you should have just bought Nvidia and you would have outperformed everything. But I think what people don't appreciate is Nvidia drew down, more than 70%, I think 5 or 6 times.
Yeah.
And so like you have to like you could in theory you could trade that and presumably trade it well, but my sense is a lot of people would have, the people who go into a coma owning that thing are going to outperform the people trying to trade it. And so there is a little rub of like, okay, cool, this thing is compounding and it's working way better than maybe you initially expected. And so you have this tension of, okay, cool, this thing's ran by my take profit. Like, do I re-underwrite it? Like, how comfortable am I that I just like I was right and now the market is like getting euphoric versus something fundamentally has shifted and the outcome here is actually way larger than I appreciated when I originally put the trade on.
Yeah. So let me ask you this. You talked about falling people who fell into a coma not trading but owning Nvidia outperformed the people that were trying to trade Nvidia. You could say the same thing about all kinds of crypto, whether it be large caps or small caps, whatever. I'm curious, the people that went into a coma presumably went into a coma because they had developed a pretty deep belief in the thing that they had bought. So, my question for you is, how do you personally develop deep conviction in something? What are the elements that are required for you to make you be like, I'm willing to fall into a coma and sit in this position because I believe in it so deeply?
Yeah, it's to me. There's like probably two parts to this. One is when I think of specifically crypto related things, which is a little bit of a different beast than non crypto, but oftentimes it's how I use the thing. So like, well, I should say the first fundamental thing is I think you have to believe something that most people don't believe about it to be comfortable with that, right? So if everybody believes something is the best thing ever, and everybody owns it, you have to think of like, cool, who's the marginal buyer for this thing, and that doesn't mean stuff that is widely held can't outperform, but you need to have a view on like why that is. Do you believe that? Uh, what do you believe that like everybody else doesn't believe? And that could be just like adoption rates for things that are widely owned, or it could be the scale that something can get to that other people would say that's crazy that you think it can get that large. Um, and so like that's the underlying thing is like, cool, what do I believe that I think other people don't believe for some reason? I think on the crypto stuff though, a lot of it is like you have to me you have to use all this stuff. It's always been an edge. It's still an edge today to me, which surprises me because a lot of people can't be bothered to use like the apps or use these things, and
Mm.
so if you like, there's a zillion perp exchanges, right? And so if you don't use any of them, you're kind of just gonna either a dismiss all of them as like, okay, none of these will work because the winners have been decided, or B, you'll just be like I used a couple of them and they seem the same. But I like it's always been the case. You look at like DeFi Summer, you look at the last couple of years, even if you kind of like build your own conviction in the sense of like, okay, cool, I've used like 100 of them. Things that are really well built, or things that like you really like or enjoy the experience, or you feel you can like feel the difference within the product. And I think like that is one way to develop your own belief, because you've used it. And so when somebody tells you like, oh, that's kind of like this other thing, in your brain you can be like, I see like why they think that, but they're actually wrong because they clearly don't see something that I see. So I think a lot of it is that. But it does come down to like, okay, what is priced in? What does everybody think? Like the terminal value, or like what this thing should be worth is, and like why do I disagree with it? Um, yeah, that's kind of how I think about stuff. I'm less of like, cool, who's gonna, less like, all right, I'm gonna buy this thing because somebody else is gonna buy it, or like because I think that person's gonna buy it. Like I'm not particularly good at that style of trading. I think
Okay.
some people are. I'm not.
What about with narratives? Narratives are obviously a huge component of all markets, right? We talk about narratives with tokens like Punch and like what's popping on TikTok or social media, but we also talk about narratives with Bitcoin and uh, traditional investors being able to access Bitcoin for the first time and all these sorts of things, right? Narratives are driving the price of basically every asset at all times. How do you identify new narratives forming? What are the hallmarks that you specifically look for that tell you that a narrative is like durable and perhaps has like real staying power?
Yeah, part of it is, and this is something we actually do internally, is uh, try to like model very specifically what we think the future is going to look like. And most of that is, we have kind of these core beliefs, and I have my own kind of core beliefs of, this is the way I think the world is moving. Um, and if that's true, what are the things that people will care about in the next 12 months or the next 18 months or 24 months? And trying to figure out, okay, why do I think people will care about these things? And what will be the catalysts that make a significantly larger share of people care like more deeply soon. So like I think I think the narrative stuff from a high level, is just like way more prevalent in markets. You can see it obviously on the short term narratives when people trade, um, meme coins or pump coins, and you have these like mini bursts of, oh, president said something and a meme coin spins up and people are trading it, and those have some shelf life. Then you have like the Bitcoin stuff of, okay, cool, this is like a multi-year, multi-decade underlying trend, and what is the narrative around this thing going to be? I think you saw privacy this past like year. That was one that came up, and I think like personally, I generally am like, cool, what are the things I believe? Like, let me write down specifically how I think the world changes, like on a year by year basis, and then work backwards from that. And generally, I'm like, okay, cool, what are the things that are underappreciated today that I think will matter? Um, and I think the benefits of that are, one, you can kind of like, one, you're comfortable sitting in something that probably is, I don't like, if not a lot of people care about it today, like it's not like this thing's super volatile and is gonna rug overnight. It's more like, cool, this thing probably does nothing, and maybe the rest of the market is ripping or doing something, and you're kind of like, all right, do I still believe this is true, or am I bleeding opportunity costs elsewhere? Um, and so that's personally how I think about things. For me, also, I would say just like the longer the trend, like the longer term the trend, the more comfortable I am with the asset, and meaning like I am not. I can't I can't. I probably haven't traded like a meme coin since Trump, And like as those like windows and the duration that some of these things traded at got shorter and shorter, like that is not something I'm good at. And so I just kind of like pick the games that I'm good at and stay away from the ones that I don't. I know some people who I talk to who are awesome at trading those things, and they're just like way more plugged in, and they're on TikTok and they're kind of like, this thing is about to pop off, and they're good at that. I'm not. So to me, it's like, cool. Pick the game you think you have sustainable edge in, and for me, it's the longer term narratives than anything else. And I just stay away from the stuff that I know I'm not good at. Let other people who have edge, win those games.
Yeah, for sure. I mean, I think that regardless, knowing that you're good at something, or knowing where your edge is, knowing where your natural proclivity towards whatever is a huge value add. It's a huge component of being successful in trading. But the lessons around how you view narrative and how you view these sorts of things, I think, can be applied to all assets. You just have to think in different time frames, right? Like, um,
Yeah.
with that in mind, then how are you able to tell where in a life cycle a narrative is?
Yeah, this is probably the golden question is like, so this is something I brought up, I think, like during Pump Funds like token launch, which was this idea that I think the hardest thing to do is to determine whether something is um, like an ephemeral type of narrative or whether it's a structural change type of narrative. Where I hate to say like, oh, new paradigm, but I mean that kind of like knife's edge of, is this the top of something that is an ephemeral moment in time thing, or is this the inflection point when you're going to see compounding returns, is probably the that's like probably the most difficult thing, and you get like the biggest divide from people because you have like huge disagreements on, this is a scam versus, no, this is actually a new way to do X, Y, and Z. And uh, yeah, for me, again, I like I if I I think part of it is like, cool, like, how did I build conviction in the thing? Like, what makes me think this is going to continue or not continue? Um, it's like um, a little bit of like trying to understand, I think, a bunch of different groups of people, and this is kind of goes back to the point around when you join like crypto, for example, you have a core group of people that you came up with, and then there's people who come later. I think that's I think like you have to be thinking about that when you think of whether something is durable or not. Is, okay, presumably if something becomes divisive to that point of, it has some moment in time, you have to decide like, okay, cool, who is there another cohort that is going to fundamentally, I don't know, continue this trend? Like, who is that cohort, and how quickly do I think they're coming, and like, where are they coming from? Um, or the flip side is like, has the exit, like, is there saturation here, and maybe it is an interesting like long term trend, but there's nobody in this like air pocket between where we are today and what the world looks like 18 to 24 months from now. That's kind of like how I think about it. I'm generally in the view of like, you should be always thinking of like, what does the world look like 18 to 24 months from today, and um, yeah, like trying to avoid the massive drawdowns in the meantime. It's not like a super great answer to your question, because I just think it's hard, but that's at least the framing of how I try to think about things. And like that's probably different if you think of like shorter term time horizon stuff. You probably just shrink it. Like, right, okay, I'm thinking like somebody who trades way lower time frame, or trades stuff that has like quicker cycles. They're probably thinking, cool, what is what is the saturation for this thing, 2 days from now, or 7 days from now, or 2 weeks from now.
Yeah, or an hour, right? Um,
Yeah,
Something that you said really kind of stuck out to me in that, and it was the piece about when people start really having strong opinions on either side, when you have like maybe convincing arguments for and against a thing, there is usually a period like the kind of more euphoria phase where everybody is just like yes, 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 and kind of saying the same thing, maybe in slightly different ways, but they're all kind of on the same side of the trade. And then you hit a point where that changes. And perhaps that like identifying where you are in the life cycle of a narrative is all about identifying when the conversation around the narrative becomes equally sided for and against it. And like you said, from that point, it can leg up or leg down, right? Who's going to win at that point? Maybe that's the
yeah,
thing. Maybe that's the big kind of flag in the ground to kind of look for when the conversation starts feeling really balanced almost between people that believe in a thing and people that don't believe in a thing.
yeah. I think that's true. I think maybe related to this too is like when I mentioned technicals being a really good risk tool to me is specifically also around this, and that's to say like I do. Crypto is a little bit different, but I still think it holds true, which is the oftentimes the narrative will follow the price,
Mm,
and so people will ascribe a reason that price is down or up after the fact, where they go, okay, it's up because of this, or the thing is down because of this. And so to me, when technicals are most useful, is actually as that like risk mitigant, where even when maybe people are euphoric and they're talking about something that's great, and you see the price action and it just doesn't like it doesn't like maybe it's run up a ton and people are like, oh, this thing is going to go up another leg for all these reasons, and you see it kind of like weak or kind of like structurally not like breaking down a little bit, but people are kind of like, yeah, this is the best thing, this is a pullback for a move higher. To me, that's like, I think that those are the periods when it's most helpful to like use it as a mitigant to try to limit drawdowns, because that is the one thing in crypto, like you do want to compound your capital over time, and this goes a little bit against my point about the coma, but it is there are so many cases where this chart or the technicals start to look kind of shitty, and the narrative is still, oh, this is just like a pullback, and we're moving higher, it's digestion or something like that. And I think it could be true, like obviously it depends, maybe it is, maybe it isn't, but I think those are the periods where you you can use that as a risk mitigant, where like, cool, I'm going to sell some, or I'm going to be out of the market here, and when I get the confirmation that this is just a pullback into a move higher, then you can kind of like, nobody's saying you can't re-enter.
right.
Versus, cool, I'm like taking risk off the table because I just like technically I don't like it, and people are talking as if this is a pullback, cool, but then that thing can like move violently against you, and so if you're able to like mitigate some of the drawdowns, like that makes it much easier to compound capital over time. But again, that's a little bit of a um, yeah, it's I think it's like, again, an understanding of how comfortable you are in terms of understanding like how you're feeling, and not trying to run an account up like 1000x in 3 months or whatever the case is, and like, yeah, trying to build it over time.
One of the biggest misconceptions I think is in trading is that exactly what you just said, running an account up 1000x in 3 months. While it certainly is possible in perfect conditions, it's not realistic in any way, shape, or form. And um, it is a problem that people feel like it should happen to them and they feel like it should be easy. Um, I talk to kids all the time, or I talk to people in the server all the time, and try to temper those expectations and try to spend time focusing on risk management as the pinnacle of the goals, right? Risk management being at the very top. I want to focus on what I'm prepared to lose versus on focusing on what I stand to make. Um, what
Yeah.
do you have like blanket rules around technicals that you know, like in traditional finance, below the 200-day moving average, a downward sloping 200-day moving average. If price is below that, you kind of just want to stay out, right? These are like just like classic TA rules. How what rules are do work for you? Like, are there any rules specifically that work for you?
Yeah, I think that your point is right, and I think actually like I know people want to make 1,000x in 3 months. I actually think you you need to first kind of understand the regime. Like you obviously you can do that if the conditions are perfect and you know you're whatever. Like it's a lot of luck goes into that and all these things, but it's just like infinitely more likely to do that in a scenario where the regime, like the underlying regime, is in your favor. And so I think that's like something that people get stuck on is they actually do understand like hey I know I'm taking a ton of risk and I'm understand these things but they're like trying to force it in a time where you have a regime that it's like cool that like this is a zillion times harder than it would be if you waited to try to execute this type of strategy or this type of like thing when the market was way more ripe for this behavior. And so I think like one is cool. What's the regime we're in? Like, is it like high liquidity? Is it like risk on? Are you in a period where that's happening, or are you in a period where there's not a lot of liquidity? Any kind of pump is getting sold into. There's risk off. People are very like skittish, and so like that's to me that's like the first thing that you should be thinking about. Then on like the technical side, I'm pretty like I don't I'm not a huge technicals person. I'm pretty boring. I basically only like the 200-day. Yeah, I think that matters. I look at it, but um, I generally look at kind of like horizontal only, um, horizontal lines. Don't use a lot of them, and generally like cool. I care about longer term candles. I'm looking at monthly stuff. I'm looking at weekly stuff. Sure, you can keep zooming in, and maybe you get earlier signal, but I don't really care necessarily about that. So, yeah, I just kind of look for invalidation levels. Um, I don't I don't use much more than that. I mean, I probably use anchored VWAPs as well as just like generally something that I care about. And when a bunch of those things line up and have confluence, then I'm like pay more attention to it. But that's kind of like the extent, to be honest. A lot of it is just like I just have looked at charts for every day for too many years, and so um, some of it is like, oh, cool, this looks like something that I've seen before, or this looks like some kind of capitulation or exhaustion, or this looks like we've had enough time capitulation that the thing's been nuked to Hades and now it's gone sideways for a bunch of time and do I want to own it? So yeah, that's kind of like the extent of the technicals I use. I don't use a ton of stuff to be honest.
Okay, fun that you mentioned anchored VWAPs. I've been a strong proponent of them for quite a handful of years. I'm actually buddies with Brian, the guy who kind of like popularized them.
Oh, really cool. Yeah, they're awesome. I really it's funny. It's like all these things that come back to just like how humans. It's just a way to be like, okay, cool.
That's right.
Like, what is the median human psychology of somebody who owns this thing?
Yeah,
How are they feeling?
yeah, yeah. It's an incredible tool. I mean, what's so interesting about it to me is that it works across the cap scale. It works from your, 40K just bonded shitcoin to Bitcoin, and everything in between to Nasdaq futures to whatever. Um, what is the difference between a narrative and a meme?
That's a good question. I actually don't. I think if you had asked me that maybe 5 years ago, I probably would have had a like legitimate answer. I think that those words have kind of they almost mean the same thing to me now. Like, sure, they I mean, depends on who you talk to, I guess. Like, if you talk to a boomer, they'll tell you those are not the same thing at all. But I, so I think like markets increasingly want like easy, digestible ways to wrap their heads around things. And like we in crypto probably just call them memes because we've called them memes forever, and a lot of people in crypto grew up on the internet and are just digitally native and younger. I think everybody who trades markets it feels the same thing. They probably call it narratives, and um, to me, it's just like they're an encapsulation of they're like the bite-sized version of expressing a view. Like we call it a meme because it's like, oh, this meme means something to me, but there's like an underlying sentiment around it. I think narrative is just a version of that. It's just a fancy way to say that. I don't think they're that different, to be honest.
Okay. You've said if you're not too early, you're too late. So I'm curious how you balance being early and how you understand the difference between being too early, being too wrong, or being wrong, I guess.
Yeah, I'm gonna kind of contradict myself because I think this is mostly true. Um, I think this is, I should say, I think this is more true for like private market stuff. And mostly that's like a function of, I think you actually, at least this is like a quick tangent because it's less trading related, but we spend time investing in like frontier technology companies on the private side. And so to us, we need to understand like super early what people are doing, and if we lose money investing in the first iteration of those companies, then we learn a bunch of stuff along the way and helps us find who will be like the V2 when like the world is ready for it and make the investment at that stage, which I think that's kind of the point I made is we need to be early there so that we have learnings on failures of companies so that we can find the company that you know is hits the moment at the right time. I think in trading, actually, I I think a lot of times people would be better off not trying to like buy falling knives or not trying to always time the bottom or always time the top, and instead view it as like, okay, is there a good risk return on this setup, and then taking a trade if it's that's up the way they want and cutting things quickly. And so like sometimes that like I can tell you an example recently is like a version of that is if you looked at like the oil services ETF OIH was like a thing that I was looking at and it had gone up a ton, and to me I was like, I think like just a month ago, baby, I was like, this is like OIH. There's a reason I like oil services. I think this is like has legs, and so I bought it on like confirmation of a move higher, and so like I wasn't early to that. Like somebody 2 3 months ago bought the Pico bottom, but there's too many times that I've seen people trying to do that, and then the thing just continues bleeding. So I think like in trading, it's more important to have um, kind of defined setups. Like that to me is the actual way to consistently do this over a long time.
Define setups meaning this is where I'm in, this is where I'm wrong, this is where I take profit. And knowing all of that
Exactly.
beforehand.
Yep. Yep. And having like the risk return actually be
Worth it.
outsized to me.
Yeah.
Like to me, because it's longer term, I care about like cool. Does this have like meaningful upside? And if not, can I shoot it in the head quickly? Is there like a quick invalidation level versus like Cred always jokes about diddling in the middle. Like, cool, is this in no man's land and there's like no real trade to be had here in either direction?
Do you have an R amount that you're usually shooting for?
I would say I wouldn't say like a hard and fast amount because I think assets move differently. Like if you have a high vol asset, you're gonna have probably slightly different versions of it. But like if I'm looking at something in crypto, it's probably at least like 3x plus. Okay. But again, that's because I'm looking at like longer term time horizon. I'm not going to trade like on a weekly basis or something. TradFi stuff is like much smaller.
Gotcha. What themes, tokens, or technologies should new traders be most focused on right now?
Ooh, that's a good question. Um,
Like, where should they
if I
be
was,
doing research?
yeah, yeah. Um, if I was like trying to trade short term time horizon and like some of the under a year multi week like day or week or month stuff, I would probably be looking at still the AI crypto related coins just because it's in the zeitgeist and like the narrative even away from crypto obviously flows through to our markets, and so that's top of mind for people. Um, I think you probably, if you're thinking of like much longer term, to me it's more I would use the like new options protocols that are starting to show up. I would use things like um, I'm a big fan of like pair because I build baskets across like crypto assets and equities. I think like you can manage risk really well there and express views. I would use tools like that. That to me, it's like the sophistication level is getting higher in crypto, and so we're just going to keep seeing tools that allow people to express views more specifically. And so like I'm those are the things that I think matter. And on the thematic side, like outside of um, outside of the AI and crypto stuff, like I just I think like there are a bunch of different sectors, and you probably can't look at all of them. And so to me, like the stuff that interests you the most, where you don't feel as if you're quote unquote like working, or you don't feel as if it's a slog to be using those things or like trying to understand them, like you should kind of just let that dictate where you spend time. Like you may like deep in stuff, or you may like I don't know, like you may like RWA stuff, and you may like tokenized credit or something. Like if you don't like some of the other stuff, and you feel like you're like it's slog to spend time on it, you shouldn't spend time on it because like you should just kind of gravitate toward what you're interested in.
I love that. What's the worst trading crypto right now?
The worst trading crypto. Wow. I would say, yeah. There's, wow. What was the worst trade? Probably, I almost, yeah. There's everything is down only.
There may not be a worst
I
trade
don't
right
know.
now.
I don't know. I think there's still a lot of, uh, put it this way. I would look at, I hate the low FDB, the low float high FDB coins. A lot of those, I would look at the coins that were low float high FDB that people were complaining about like last year and the year before, and I would look at how much like I would kind of look at their unlock schedules because I think a lot of investors still do not have DPI for their LPs and will um, want to monetize things that are unlocking.
Hmm. Okay. What's the most
Yeah.
asymmetric trade in crypto right now?
It's one that I think is pretty asymmetric that is divisive is layer zero actually, and so I think you saw like an announcement they made. People took two sides. Some people were like, "This is awesome. Look at this tech. This is like what Ethereum World Computer could be, and they're going to fulfill all this stuff, and they're doing institutional partnerships, and they're going to have massive volumes and all that stuff." And then you had another side who was very vocally saying, "This is another infra coin, scam coin, insiders dumping, uh, huge unlocks," and I think that's like kind of one of those coins that yeah we talked about before, which is it's very divisive, and I don't yeah.
Okay. Cool. Last two questions for you. What should new traders do less of?
You know what I would say? They should probably. What I would do is tell people that if you're tailing people without your own conviction, um, I would cut aggressively if it's winning, and you don't know why you're in it. Like I think it's fine for people to tail, and I think like actually copy trading isn't the worst thing in the world, but I think if you have zero conviction, you're kind of doing it blindly, or you're not sure why you're in the trade. I would kind of like aggressively be cutting that position if it's working.
So do less of following blindly if you don't know why you're in the trade.
Yeah, I generally am of the view of like you should build your own conviction, but I know some people are good at telling people.
Hmm.
My view is like if you're doing that, you should be aggressively cutting. And personally, it's like I think you're gonna be better off developing your own conviction, but I know that um, it's not always the case.
What should new traders do more of?
Journal. I can't say how beneficial it's so beneficial. I think people should be writing down what they're thinking in the moment way more often if they can, and sharing ideas. I also think that's something people feel as if they don't want to look dumb, or they yeah. The more you share ideas, I think you get better quicker.
Awesome. Smack, man, this has been such a pleasure, dude. I've really, really enjoyed talking to you. It's been a really cool conversation.
Yeah, this was great. No, I appreciate you guys having me.
And we really appreciate your time. I'd love to get you back on at some point, maybe later on in the year, and catch up and kind of see how the markets are doing relative to what you thought they were going to be doing.
Yeah, definitely down. Always down. Happy to chat again for sure. I'll be back.
Awesome. Well, right on, man. Again, thank you so much for your time. We really appreciate it. Very meaningful for us. So you take care of yourself, and we'll talk again soon.
Cool. Sounds good. Take care.
All right, brother. Bye.